Profit 1% higher, that's Mphasis for you. Reported earnings. We're now being joined by the management, Mr. Ganesh Ayyar, CEO at Mphasis. Sir, can you take us through the key highlights of the quarter?
Sure. So, Hina, we always said that Mphasis is going to lead with direct, and we spoke about direct international. And direct international consists of three businesses. We call it direct core, digital risk, and product performance or product portfolio. So let me give you some data on direct core, which is 72% of our direct international. If I look at the entire year of 2016, we grew 19.5% in direct core, which is absolutely brilliant. And if I look at Q4 and compare it with the same quarter of FY15, we grew 27.2%. Now, this is clearly far above than the market growth rate, and it supported our point of view that we are going to lead growth with direct. Now, let me go to the second part of our direct, which is digital risk. And if I look at FY16, this grew at 32.7%. And if I look at Q4 and compare it with the same quarter of FY15, we grew 26.9%. So once again, super performance by digital risk. In terms of new wins in direct international, we added $303 million of total contract value, and roughly 55% of it came from next-gen, digital, and GRC, which is quality of revenue. And $303 million gives you about 15% growth in new wins over last year. So overall, superb results around direct business that we have had, not just Q4, but the entire year. And new wins gives us optimism about the future, that we will continue to grow faster than the market in the direct core space of Mphasis. So that's kind of overall highlight of our performance in Q4.
Right. So on one hand, while we understand that strong deal wins helped you deliver great numbers in the fourth quarter, what is the pipeline ahead that you have, and what kind of an outlook can we expect for as far as deal signing is concerned?
Our pipeline is very strong, and it is reflective of the change in the marketplace. If you look at traditional IT, it is clearly shrinking, but there is tremendous opportunity in new generation areas. And I see our pipeline to be stronger than what it was 1 year ago, not just in terms of size, but in terms of quality of deals. It is really good. So I'm very bullish about our direct core business growing faster than the market in FY17 as well.
Any number that you can give us as far as the growth rate that we can expect in FY17 now?
I mean, at this point of time, I would like to say faster than the market rather than giving precise numbers. We do have precise number plans, but not ready to share it with the media at this point of time.
What about HP, Mr. Ayyar? That has been declining continuously now.
See, Q4 we saw a slowing down of decline somewhat, which is a heartening sign. I believe that we will start reaching stability on HP decline, which has been declining at the rate of about 21% per annum in second quarter of FY17. So which is a good sign. It is also part of our overall plan, including Blackstone's acquisition of HPE's stake within Mphasis. So we spoke about the minimum revenue guarantee as part of master services agreement. So all this points to a stable regime with HP as a customer from second quarter onwards of FY17.
Right. Your EBITDA margins, we understand, have expanded by about 150 basis points on a sequential basis. Where do they head from here? Are they sustainable at the current levels?
So we mentioned that in second half of FY16 we will operate between 13 to 15% operating profit margin. We are now saying in first half of FY17 we will operate between 14 to 16. So we are upping the range by 100 basis points.
And what's going to be the key strategy ahead for FY17? The focus on direct international will continue?
So our focus is international market. And direct core is clearly the engine of growth and success for us since it constitutes 72% of direct international. So it will remain our focus. We are also focused on new generation services cutting across. Digital risk is also our focus. So it's not we are defocusing from digital risk. In fact, what we have done is we had a strategic roadmap. And if you recall, we basically said that as part of that roadmap that we were exiting the domestic BPO business. At the same time, we looked at alternate models for our ATM business. So we are well on our way to execute our strategic roadmap.